This simple number costs you $400,000. Walk into a bank Tuesday afternoon, see two people, same chairs. Filling out identical forms for the same house, same street. Same price, same down payment, same loan. One leaves paying $2,004 a month. The other pays $2,163 a month. They nod in the parking lot. Neither knows what just happened. Over 30 years, that $159 monthly gap costs the second guy $57,240 more. For the exact same house, same neighborhood, same life. And that's just the mortgage. By the end, the total gap between them. In insurance, car loans, deposits, and lost rewards, will near $400,000. Not 'cause one earned more. Not 'cause one was smarter or luckier. But 'cause one had a 3-digit number, the other didn't. And the bank never explained it. I'm Nick. I spend way too much time thinking about money moving from your pocket to lenders and insurers without explanation. Ever checked your score and seen 710 or 730 and thought, yeah, that's fine. This video is for you. 'Cause fine is costing you a fortune. Let's crunch the numbers. Before we dive in, let's clarify what we're talking about. Credit scores are confusing. Mostly 'cause we're told anything over 700 is great. Spoiler, 700 is fine, not great. Big difference. And that difference has a dollar amount. FICO's 300 to 850 scale has 5 tiers: poor, fair, good, very good, exceptional. 800 to 850 is exceptional. That's what you get after years of doing everything right. But banks still charge interest. The financial system loves discounts on debt. Here's what most miss: $800 and $850 are the same to lenders. Nothing's reserved for $850. That isn't at 832. Clear 800, you've unlocked it all. The journey from 800 to 850. Mostly vanity. How rare is 832? Average FICO, 715. Median, 744. Only 23-24% have 800 plus, about 1 in 4. And 832 is way above that, 93rd to 95th percentile. Only 5 to 8% are there. A perfect 850. That's 1.76% of consumers. About 4 million people. What's wild is this. Credit scores are splitting into a K-shape. The middle range, 600 to 749, shrank from 38% to 34%. Both top and bottom tiers grew. People are at extremes. The gap between good and bad credit isn't stable. It's widening. Let's meet David. He's 31, pays bills on time. Has a couple of cards he doesn't max out, and a 714 score. He thinks it's solid. It is fine. 58th percentile. But fine is quietly expensive in ways David's never seen. Hang on to this, 13 out of 14 Americans are leaving money on the table, not realizing it. We'll find out how much. The mortgage number alone will shock you. This is where credit scores shine. Using 2026 data, a $320,000 mortgage, 20% down on a $400,000 home. Costs differently by credit tier over 30 years. An 832 score. 6.41% APR, payment, $2,004. Total interest, $401,000. A 700 score. 6.63%. Payment, $2,050. Only $46 more per month. Until you run the 30 years and see you paid $17,000 more. A 680 score. 6.80%. More interest, at Fair Credit, above FHA, you pay 7.15%. Rate. Monthly payment, $2,163. Total interest, $458,000. That's $57,240 more than the 832 borrower. For the exact same house, yard, neighborhood. The only difference? The score. $57,240 for the same house. That's a car. A year of private school. Enough to make anyone question their life choices. And the banker? Slept fine. Think $57,000 is survivable. Let me reframe it. That's $159 extra/month for 360 months. Invested at 6% annual return. It compounds to $181,000 over 30 years. The real cost of a 620 versus 832 on one home isn't $57,000. It's closer to $250,000 in lost wealth on one home. And most people buy 3 to 4 homes. You might feel sick. That's normal. David buys with his 714. His rate, 6.63%. He pays $46 more/month than the 832 borrower. And thinks he got a great deal. He has no idea he's funding the lender's bonus. If you think the mortgage is the whole story, the next few minutes will be worse. The mortgage is the part people have at least heard of. What they don't know, insurance charges a credit tax yearly, unrelated to driving. First, cars. A $35,000 vehicle, 60-month loan. With an 832 score, super prime, your rate is 4.66%. Total interest, $4,300. A 700 score pays 6.50%. Total interest, $6,100. A 620 score pays 9.50%. Total interest, $9,100. The 832 buyer saves $4,800 on one car versus the 620 buyer. Over 6 to 8 cars. That's $28,000 to $40,000 in savings from car loans alone. But here's the shift. It's not just a lending problem, it's a full financial penalty. The score gap hits you even when you're not borrowing. In 47 states, insurance charges more based on your credit score. Not your driving. Your credit score. California, Hawaii, Massachusetts. State said, no way. Most said, yeah, sounds good. So if you live in one of the 47, you're paying extra for your car loan and nobody told you. Top credit drivers pay about $1,673 per year for car insurance. Bad credit drivers pay $6,254 per year. Same person, car, record, commute. Only credit score is different. That's a $4,581 per year gap. $381 every month for the same drives. David pays $2,400/year for insurance. He thinks that's normal. Normal is $714. His neighbor with an 832 score pays $1,673. David overpays $727 per year just for a lower score. It's monthly, feels like part of driving costs. Over 40 years, that's $64,000 plus extra before any interest. And that's before homeowners insurance, same deal. Before utility deposits. Yep, they check your credit too. With an 832, deposits disappear. With a 620, pay $200 to $750 upfront, no lights yet. Total lifetime cost of bad versus great credit? $400,000. That's 9.4 years of median pay. It quietly adds up, higher payments that feel normal. Now, what changes when you hit 832? It's not just rates. It's all your financial options. Premium cards, Amex Platinum, Chase Sapphire, etc., are a whole other world from secured cards. 800-plus score holders earn $500 to $2,000 per year in rewards. Rewards lower scores miss out on. Analysis shows 800-plus have $73K credit limit. National average is $30,000. So, 800-plus have double the credit. Even spending the same, their utilization stays lower. This keeps scores high, limits growing. The system rewards you for being ahead, makes climbing harder. Not rigged, but self-reinforcing. And rentals. Competitive cities, 30 to 50 applications per unit. An 832 score ends the search. Deposits waived, maybe a free month. 620s fight for leftovers. And jobs. 51% of certain jobs check credit. Bad credit can cost you the job. So much wrong advice out there about credit scores. Some costs people money for decades. Myth 1, you need a balance to build credit. This is the most expensive credit myth ever. Passed down like fact. It's totally false. Always has been. Whoever started this cost Americans millions in free money to card companies. Not cool. Your score cares that you use credit and pay it, not that you carry a balance. Pay your full balance every month. Myth 2, closing in used cards is smart. Closing a card lowers your credit, raises utilization, shortens history. All hurt your score. Keep old cards open, use them for small recurring charges. That's it. Myth 3, checking your own score hurts it. 2 types of inquiries. Hard ones, lenders, cost points. Soft ones, you checking, are free. Check it weekly if you want. Myth 4, income affects your score. It doesn't. Income isn't on your report. Not a FICO factor. Good habits beat high income. Scores track behavior, not earnings. Myth 5, 850 is the goal. It's not. No difference between 832 and 850. Benefits max out 760 to 800. Above that is extra credit. One last thing before we switch gears. This is key. We know what 832 is worth. Myths busted. Now, how do you get there? FICO's formula, public. Payment history, 35%. Utilization, 30%. History length, 15%. Credit mix, 10%, new inquiries, 10%. History and utilization are 65% of your score. You control both now. Get to 750 by cutting back, not building. Get utilization below 10% before closing date. Set up autopay. Pull free credit reports. Check for errors. Millions have bad data. Disputing is free. Stop applying for new credit. This takes 6 to 12 months. Not exciting, but it's the foundation. Lenders treat you differently. Quotes change. You can feel the tiers shift. 750 to 800 is optimization plus patience. Push utilization below 7%. 800 plus average is 5.5%. And both are things you can control right now. Going from 700 to 750 is about cutting things out, not adding them. Keep utilization under 10%. Pay your balance before the statement closing date, not just the due date. Set up autopay for all accounts. Get your free credit reports from all 3 bureaus. Then, check for errors. Millions of Americans have bad info hurting their score, and disputing it is free. Stop applying for new credit. This part takes 6 to 12 months. It's not flashy, it's building a solid base. Your score starts to feel legit. Lenders treat you better, loan offers improve. You can actually feel the difference in how you're treated. Going from 750 to 800 is about fine-tuning and waiting. Aim for under 7% utilization. Mix up your credit types with installment loans. Especially if you only have credit cards. Don't open new accounts now. Let your current ones get older. Here's a surprising tip. Using 1% on one card is better than 0% everywhere. Models see zero use everywhere. As possibly unused credit. Keep a small balance. When your statement closes. This stage, 1 to 3 years. Going from 800 to 832 is all about time. People with 800 plus scores have old accounts for 23 plus years. No quick way to get 23 years. Try the AZEO method. All 0, except 1. One card at 1 to 3%. All others 0 at statement close. Keep 8 to 10 accounts open. Never, ever miss a payment. Don't apply for anything. Just wait. You can't rush this. Time is the main ingredient. Start 10 years ago. Second best. Start now. Warning, one missed payment can tank your score 50 to 80 points. At 832, a missed payment hits harder. The system sees a big change. Autopay is a must. It's non-negotiable. One last thing, maybe the most important. Everything so far was about reaching 832. What happens after 832? There's a hidden trap the industry won't warn you about. A high score isn't financial health. Mixing them up can ruin you, quietly. With an 832, banks offer huge loans. Brokers show you your max approval. Cards offer high limits, low rates. Useful, yes, but the system pushes you to borrow more, not to think. Someone hits 832, gets a big mortgage. Finances cars, opens cards, posts financial freedom. Score is great. Net worth is tiny. They built an expensive illusion. Looks good until a job loss hits. You can have 850 and negative net worth. The score tracks debt, not wealth. $1 million in investments, no cards. Lower score than someone drowning in debt. The system doesn't know who's winning. Real wealth uses credit as a tool, not a game. Goal isn't max borrowing. It's an 832, live below means, invest, then use the score. Get great terms on what you need. Score is the dashboard. Wealth is the destination. Don't confuse. 832 is a number most ignore, but it's a tool. Pays off your whole life. One home purchase, 832 versus 620 costs $57,000 interest. Or $250,000 less wealth from compounding. Car loans add $28,000 to $40,000. Insurance, $4,500 per year more. $64,000 over a driving life. Total difference approaches $400,000.